Hi, everybody. Welcome to Deep Practice for the last Thursday of September 2019. Good to see everybody tonight. Try not to go as long as we did last time. I went a little bit too lengthy last time. We'll try to keep it back to an hour and a half, maybe even a little less tonight if we can. Okay, so tonight's agenda, we'll take a look at the British pound as usual, deep practice again with the Weiss wave, the daily and the hourly. Kind of an interesting chart tonight. Not an easy one, but it'd be fun to do, I think. You'll get something out of it. And we'll take a look at the current markets. Okay, let's take a look at the cable. Let's start with the monthly chart here. We're working off of a monthly spring, which finally came down to 1.20001001. Excuse me, I put an extra zero in there. And so far we're getting a pretty good response off of it, off of that spring. You can see on the weekly that the volume has come into the upside and it's now pulling back. Let me get the thing here just for this. So you can see on the weekly, volume picks up as we move up. Volume picks up as we move up. Now we come into resistance up in here and the volume starts to dry up and we're coming down and the volume is drying up as we're coming down. So then we look at the daily. We say, where might this thing end? Is it going to end soon? Well, probably, because I can see the shortening of the thrust beginning to happen here, right? I can see the less volume on the last bar. And I also notice that there's a couple of spots of support in here. Let's just go through them quickly here. Yeah, all right, so to this, just going to use this. So we could say there's some support here. We're kind of, maybe it'll hold in here. I kind of think though that the support is going to be down in here somewhere. One more, but somewhere between, let's get the box. Somewhere between here and there should be where this market starts to come off, and it could be right in here. So we really have a fairly narrow range in here. What we want to see is more shortening of the thrust. We want to see some buying coming in here. It may do that right away. It may take a little bit of time, a few days to consolidate, but this is the area that we're looking at, right? So then now if that works out, then first area to get over would be up around the 125 level in here. Because of this is where the supply came in, so we would note that, right? Push up and through. If we can get through that, then we're going to be pushing up to 1.26, whatever the high is up in here. The 2624, 2625, so up in that area, and then on, swing high and then higher, right? So that's what I'm looking at for the cable. Obviously, if we close below this level here, close below 123, that's not a good sign, and then we could go lower, maybe back down to retest in here. But I think that's pretty much over because we had a lot of this activity in this area. So watch and see if that doesn't hold sometime, maybe tomorrow or early next week. Oh, excuse me. Any comments or questions on that? So remember, we have a monthly spring here, and a monthly spring should take out the last swing high, and the last swing high is up here, around just below 135, whatever that is, 134 and change. So we're looking for this to push up into here, maybe up into the 140 area before there's some resistance in here, before it hits resistance, then consolidates, and then maybe goes higher. We'll see. That's getting ahead of ourselves. But you can see that if this is the idea. We use the higher time frame to sort of identify key levels of support and resistance, and where and the direction of the market, where it's likely to go, the next likely move. And you can see that there was buying way back in here, back in the beginning of 2017, and now we're back in that area again, and so far we've got buying coming in. So that's what we would be looking for. And we can read it on the hourly as we did, and we can see the entries and the exits on the daily. Is there a micro British pound? Do I know? I don't know, tell you the truth. I really don't know. Does anybody know? Is there a micro symbol for the pound? I don't know if it would have a lot of trading associated with it. Maybe it would. If the monthly were to close where it is now, that suggests more testing before rallying. Possibly, yeah. I mean, you know, you're looking at the monthly here. Let's say that it was going to close here. We'd want to drill into the smaller time frame, and we'd want to know what's this level here, 123.14, which I think it's this level here. Yeah. And so does it come in? You know, there's a pocket in there, a small pocket. Is this an area where the market is going to find support down in here? And that's really what we're looking at now coming in. So even if this closed here, we would look to the weekly and the monthly, the weekly and the daily, right? Clear this off, hang on. So we look to the weekly, we'd see good, this is on the weekly, we have demand overcoming supply, right? In here. And so now we're looking for continuation. We popped off of the monthly support. Now we're looking for the next month to be continuation here. And so it's the same analysis, same thing, okay? Same basic analysis. Let's see, there is a micro, says Brian, but it's very, very thinly traded, which is what I would expect. It wouldn't be a happy thing to trade because of the lack of liquidity. You know, you see this doesn't get a lot of trading. You know, 100,000 shares on a daily is pretty good, pretty average for this market. You know, compare that to the S&Ps or whatever. So yeah, there is a micro, but not traded well. Okay, let's move on then. Okay. So let's go to deep practice. Here's a daily chart. And we are in congestion here with overhead resistance, as you can see. So how do you view this? How would you view this for tomorrow's trading? Excuse me, tomorrow's trading on the 5-minute chart and the hourly chart. How would we view this? Would we see this as bullish or bearish, do you think? I'll give you a few moments to get into that, and then we will do some deep practice. Oh. This is less easy to figure out, but it's a good little study, I think. This is a little bit harder because we're in congestion. So what do you see there? You think the market is pushing up, or is it about to stall and come down? Dwayne says, it looks like the up move is running out of steam based on the last bar, which is no demand. Also, as you pointed out, we're approaching resistance and the volume is not high, so I'd be looking for a pullback. Okay. So you're looking for a short opportunity. Okay, that's good. Pranay says, going up on low volume, no supply, seems pure demand. Not sure what you mean by pure demand. Yeah, but it is just floating up there. That's true. Give folks another moment or two. Trading ranges like this are often very difficult to assess, but I'll give you some clues. Excuse me. I'll give you some clues that you can use when you do assess trading ranges. This one's also a little unusual because it gets typically you find trading ranges, the swings, right, would be larger in the beginning and then they would narrow down, and then they tend to narrow down. This one's doing just the opposite, kind of unusual. The swings are getting a little wider here. You know, we've got this, and then bang, it goes all the way down like that. Paul says, poor uptrend runs out of demand. Selling comes in on widespread bar with mid-range close. That's got to be this bar here. Just tag that. It's got to be this bar. Next bar, market finds support. Following rally runs out of demand. No demand above resistance. Market moves down on increasing spreads and volumes. And no demand follows the biggest widespread bar to the downside. This one here. No demand on final rally. Shortening of the thrust and decreasing volume on last bar. Okay, good. So I'm guessing that you're kind of bearish there, right? Yep, I could guess that. All right, let's, hang on a second. Okay, Dean says, price has been in a trading range for some time. The large range bar with high volume mid-chart suggests price tried to go down, but demand overcame supply with mid-bar close. Let's see. Price holds, then pushes higher on light volume for the last 4 bars. You're talking about this. Tries to go down and sees buying come in. That's right. Tries to push higher last for have shortening of the thrust on last bar, so my bias is short, but I expect price to test into the overhead resistance and push lower than into the 2460 range. So you're expecting it to go up a little higher and then come down into that area there. And yeah, I would tend to agree with that assessment. And then Brian says, uptrend moves into a trading range. Most of the range is inside the range of the wide bar, which is 12 bars from the left. That's this, most of it, right? That bar contains supply. There's a larger block of volume over the next 5 bars. Then, yeah, a larger block of volume over the next 5 bars. Yeah, these bars here. Oh, so you were talking about this. I apologize. So these 5 bars. Yeah, good catch. Then the attempt to rally on no over the next bars. Then there's an attempt to rally on no demand and produces an upthrust with a 2-bar reversal. Volume increases as the market falls, which is there's more buying in the 240 area down in here. Over the next 7 bars showing no supply. Then the rally at the end shows excellent ease of movement up. Final bar, the volume declines, but I'd be bullish given the strength in the background. That's what we're looking for here. I'd look to buy a weak pullback towards the 8-day high shelf of support. I'd be wary of an upthrust of the weekly high. Yeah, good for you, Brian. Good for you. You see it. Yeah, so let's take a look at this in a little bit more detail. So as people pointed out, we're rallying up and then we hit this, which was supply coming in, right? But it closes mid-range, so there's buying in here and there's buying along these bars as well. Notice this block of volume. It kind of sticks out. You may not have seen it, but it's all about the buying in here. It's all this big volume is about buying. Of course, we then get into no demand as it goes higher, and we get a reversal and an upthrust in here. We try to rally up, but the supply comes in again and pushes down. You can see it starting to increase, right? But we get back into this area here, the 2440 area, a little bit bigger, higher than that, and bang, market goes right back up again. Then it gets slammed down, but notice what happens. It gets slammed down. Let me erase these things so you can see. This is the level, right, we're talking about. So it gets slammed down hard with big volume and then bounces right back up and pushes up above this low here. I just am kind of eyeballing this 2030 to 2475. My goodness, that's a lot of range there. That's a huge amount of range. Is that 140 points on a day? My goodness, that's a lot. Okay, so, but it closes back up. We kind of drift up and then we see some selling coming in again. But then the volume gets dried up. We have one more chance here to come down. This is a perfect opportunity for the sellers now to step in and push this market down and really collapse the market. But they can't do it. They can't even bring it down to the low here. It comes right back up again. And we see more buying coming in here, and then the market lifts off. So in a way, we have a little apex in here, right? Where we had everything was kind of contained in this, and now we're just about ready to push on up. So we have a lot of buying in here, and in here, and in here. So I don't see tremendous amounts of selling where it's really clear that this is negative coming in. It had several chances to go down lower. It could have, you know, after doing this bar and having this rally up, it could have pushed back down here. It didn't. It could have continued to come down here, but it went up. It could have continued here. Certainly could have continued here. And we even not this bar, but we even dip back down again, has another opportunity to go lower just in case, and it pushes back up again. So this is very bullish behavior. And while we're not going up on a lot of volume, a lot of demand, it's just floating up. Basically, the supply is, you know, kind of gotten sucked out of the market. And that's why it's not, that's why we're able to go up on easy volume. You frequently see this at the bottom of a larger range, larger trading range, or the markets come down and comes down hard, and then it spends time in a range in here, and then starts to push on up, right? Typically, this initial push is on light volume. It just, as David Weiss often says, it just levitates up because it's all the supply has been taken, all the immediate supply has been taken out of the market. When they drive it down like this, and like on these bars here, that encourages sellers to come out. Look at the volume. It spikes on big drives like that. And the reason is because people get emotional and they jump into the market or jump out of the market. If they've got long positions and the market starts coming down, then they're covering, they're exiting their longs, and others are buying it. And these big stopping volume type moves, or these big volume moves, often stop the market and push it either sideways or turn it around. There seems to be an access line at 2460. Yeah, there is, isn't there? I didn't see that. Right along, yeah. Certainly in here. And that seems to be a level of control for me. Yeah, it would be. I mean, if you were to think about it, you say level of control, but if you were to think about it in terms of not market delta, what is it called? But they use a point of control, and it would be right in here. This would be the point of control right along that area. And it might even be along this line, but it's in this general area somewhere. So yeah, that would be, and they would set in the, what is it called? Not market delta, it's market profile. Yeah, thanks, Edmund. Yeah, market profile. And market profile would say that when we get a point of control, in other words, when the price figures have gotten to the point where it's fairly narrowed down, that's when we're going to anticipate a breakout. Now, the market profile people will tell you they don't know which way it's going to go. They don't really care. They're just going to put a buy stop here and a sell stop here or whatever. They have some form, they have ways of doing it, and let the market pull them in. But that's what they're basically looking for. So yeah, it's not, that's that's a good way to think about it, Scott, is that you've got this level here. And so you know that this is a key level. If the market goes up, pushing up here, then it's unlikely to come back down to it. And if it does do that and goes through it, then you know the market's changing again. So that's good. Let's see if the 240-minute chart gives us any additional information. And you don't have to focus, don't do the whole thing. I just put it in here. This is the whole trading range. Just focus on the last half of this here. What do you see here? Does it confirm a sense that we're likely to see bullishness tomorrow, or does it confirm a sense of, oh boy, watch out, this market's going to be bearish tomorrow? How do you view it? Just looking to see if the 4-hour chart, the 240-minute chart, adds anything or not. And if you get David's nightly email, or he does it, he sends it out 4 or 5 days a week, 5 days a week for the markets, for the S&Ps, and he'll often use a 3-hour chart. And that's fine too. Either one is fine. I like to use a 4-hour chart because everything that we do, a week or a month, or we go from a 15-minute chart to an hourly chart. It's usually in terms of 4 or 5 bars, 4 or 5 bars of the smaller time frame into the higher time frame. And this has 6 or 7 bars for the day. So it's a little bit more, but Brian says shakeout on high volume gets successfully tested. Strong ease of movement up, then holding gains at the highs. This looks very strong. Yeah, isn't it amazing what you can see out of this? Last 3 bars appear to be bullish due to the long bottom tails, and it's holding gains, so bullish. Holding the gains, yeah, and just reaching and reaching and reaching higher up in here. Yeah, that's good. Let's just go through this a little bit. So you got you've got to, so here, if we were watching this real time and we see this occur on the end of the day, well, the question in our minds would be what? Is this supply or is it stopping volume, right? And we know on the very next bar, it's stopping volume because it pushes back up again and then rallies. But then we come down in here and we see the market stop at this, I labeled this 1 in here. We come back and it's right down in here. And then we have this oddball bar here where the market went way down and then way back up again. I will bet you this is an FOMC day, because this is, I think this is I don't know if this is the end of the week or not. I shouldn't say that. I don't know. Maybe it's an FOMC day. It looks like it's occurring during that period of time. In any event, it comes down to the high volume here and then pops right back on up again. So we have 3 indications that this is bullish rather than bearish. One is the rally up here, and the other 2 are these 2 dips down in here and failures to go down. Then we get nice ease of movement coming up, and we're doing it. Notice how we're pushing through hard here, right? And notice we push through hard here. Why is that? Well, something I learned from Tom Williams, that the markets will gap or go with great acceleration like this through areas of big congestion if they don't want to be, if the bigger players don't want to have to be buying up contracts from the sellers who are still short in here, right? People who are short. So they push through. And you can see all the congestion over here. There was supply and supply and supply and supply, 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 supply. And here it knifed through the supply, and now we're pushing right back on up through it. So this is a little indication that not so much that we've got good ease of movement and demand and all that, which we do, we have that, but we're knifing through this big congestion area. It's attempting to push itself up and through. And then, so that's very bullish. And then the last bit in here is this. We're in resistance where we know supply had come in earlier, right? And this is, every time it dips down, it's pushing back up. This is what's called holding gains in here. And you can even consider this to be some absorption, assuming that it doesn't come down and go through this. You don't want to see negative bars in here. These are all positive bars and on good volume. So that's a good look for the absorption idea, right? So this should go up and push into or through this high, So the 240 chart gives you the sense that, oh yeah, there's buying going on in here, and we're looking for some follow through. Any questions on that or comments about that? Oh, I didn't see all this. Sorry. Shakeout on high volume gets successfully tested. Oh, I did get this. Yeah. Okay. Never mind. All right. Just as a reminder, we're on normal schedule for next Thursday. It'll be October at our normal time at 8 o'clock. So let's go to the chart. Here's the daily chart in here. And it's just advanced with a couple of a few hours from earlier in the day. Anyway, so here's where we ended off, and now here's what's transpired since yesterday's close. Basically, we're in the same spot. We went up a little bit higher, didn't go all the way down to the low, and we're almost at the same level of close as we were yesterday. And this high here is 2481.5. And then yesterday's high is 2477, and yesterday's low is 2469. So I got those on both of the hourly and the 5-minute chart. So we'll see those as we go along. So I'm just going to move this down over here. We don't really need a lot of this. And I think I might just narrow this down a little bit too. There we go. And so the hourly, not a lot to say about this. I click the volume here. We can see that the market kind of closed and then spent a few hours, tried to go up above yesterday's high, and it failed. Excuse me, failed. Excuse me, and came down. We get a little pop in volume. Next is no supply. Next bar is a little bit of demand coming in, and then we see more demand coming in here. And then we pull back a bit, come down into this pocket, it looks like, and we're here, right? That's the hourly. So what this tells me is that the market came down, couldn't come all the way down after failing at yesterday's high, couldn't come all the way down to yesterday's low before it started to hold, and now it's holding about mid-range here, and the odds would favor a push. I mean, it's only a couple of points away, but a push up into yesterday's high would be how I read that. And then on the 5-minute chart, not a lot going on. You can see it's pretty thinly traded. We came up, fail there at yesterday's high. We come down. We actually created a bit of a spring here. And then have pushed on up since then. What else do you notice about this? Do you notice anything else about the chart? How about in terms of volume? Selling climax mid chart, yep. So that would be in here. You can see that the market popped, the volume popped here. So we get some climactic action, and I would imagine that that occurred right over here. Let's see if that is true. Yeah. So that would have occurred here. And there's the volume. And then we go sideways for an hour. And we go sideways for another hour and create the spring and push up. The last supply wave is small. Good. Yeah. Where the down move occurred with lots of volume, the move down was low. So buyers coming in at the lows. Yeah, buyers came in at the lows. And notice too that we have potential climactic action in here, or likely climactic action or rally. Look at all the volume that came in here and we didn't go down, right? That's, yeah, effort versus result, right, to go down. But then look at what happens. See, this is demand overcoming supply here, right? We get the big Weiss wave up in terms of volume. Then we come back down, not much, right? Now we're up in here. We're back at the top, we're getting less volume, so we could see a pullback, but we would be looking for, there's demand now in this market, presumably. Now, how would that change if we don't see stabilization somewhere in here somewhere and supply starts to come in, we start to see the red bars, the red volume get high, then we wouldn't be looking. But this is the setup now. Look at what we've done, right? We look at the daily and we say, okay, it's basically about the same level. It had gone down lower and it had gone up higher, but it's at the same level. Let's take a look more carefully. Well, went up to yesterday's high, but failed in the Asian session, but then came down and in the European session seems to have consolidated here and is starting to push up. So this is bullish, right? This is bullish in here. Right, we're pushing up. And then when we look at the 5-minute chart, we see, oops. We see the stopping, we see the climactic action. That's bullish. A successful secondary test, that's bullish. Effort to go down with all of the volume, but no result. That's bullish. Rally up, creating higher highs here, first higher high, and also demand overcoming supply, bullish, right? Then a pullback on light volume, bullish. Now, less volume here, but the background is bullish. So if we're now looking for a pullback to get long. So if we get a good pullback in here and the market, stops going down, consolidates, we see some bullish bar activity, then we buy. This is kind of like a follow-up. Remember last week somebody asked, how do you really tell the bar by bar stuff, and how do you really how do you understand any, or she gave us a chart from a few weeks ago on a deep practice and said, how do you do this? And so I went through, starting with the monthly chart, then the weekly chart. Then we started looking at bar by bar stuff on the daily, but not really before that. Okay. It's the same stuff. Brian says, at this point, would you consider that the low of the day has probably been put in? Yeah, I would. Or would you wait for the open and retest of the lows to reserve that? No, I'd be thinking, this is pretty decent in here. You get supply. There's enough supply in this market. You'd think that there was enough supply in here with the high volume. This was all fairly high, as I recall. Yeah, decent volume coming in. Yeah, so pretty good volume. So some buying in here, just not pulling the volume that they had over here, which you would expect anyway. But yeah, I would say that the low is likely put in. What would quickly disabuse me of that is if we got up into yesterday's high and it fails up in here, and we start coming back down. Then if we don't push through yesterday's high, and it doesn't, we're going to at least come back down to test here, and most likely come all the way back down to test all the way down. But I would be considering this to be the day's low, but it still has to perform. It has to get above this level here before we can think about that. Hopefully that makes sense. All right, so let's start working through this chart. You're welcome. No worries there. And so one thing I would do here is do a little bit of chart stuff, I guess. Pick a spot, maybe along here. Yeah, something like that. So this is kind of the line in the sand. If it starts closing below whatever this is, 73 3/4, 74, then we're likely to go all the way back down to the low of the day. But we're looking for it to hold somewhere in there, right? So that should, what did that tell you, right? That there's buying coming in. It's a spring. Yeah, so we can buy it here on the close. Different ways of doing this. So you can buy it now on the close right here, 74 1/4. Or you can put a limit offer out there, or a bid out there to buy at, say, 74. If you want to save the 1/4 point or whatever the low is here, you can try to get in that way as well. So you might have gotten filled at 74. This is pretty narrow range to be fooling around with that, but I would just buy the close instead of trying to, if there were, a point or two difference, then I'd try to get a 1/2 point better fill, something like that. And you may never get filled at 70 there because it doesn't really, there we go. So as we came down, notice that we didn't really build a lot of volume to the downside. Basically, it's roughly the same level as before, maybe a little bit more, but certainly not the same as back here, as what we were seeing coming down earlier, even though it's in the middle of the Asian and European session. This is getting closer to the US session. So some nice lift here. Now we're coming up to yesterday's high. What do we anticipate here? What do we expect is going to happen here? Or would be likely to happen? Yeah, some selling. And so we hit yesterday's high. And look at that. So this looks like it might be coming into yesterday's open. That's not enough volume yet. So what would you think about a bar like that? Minor climax? Maybe. We didn't really get going though. And there's some selling coming in. Should we still hold this trade, or should we cancel the trade, get out of it? Do you think? First glance looks weak, but I expect selling at yesterday's high. Still higher high, higher low. I'd hold, says Brian. Yes, and don't forget, we have all of this stuff in the background here, right? We didn't close lower than that last bar, so I'd hold. Okay, let's hold then and see what happens with it. So that was 5 minutes there. Low. It's an inside bar. Let's go back one. It's an inside bar, right? on higher volume. So you might say, oh, there was a lot of effort to go up, but we didn't get much result. But look at what you've got here. You got a higher close, a higher low. You do have a lower high, but this is still trying to push up. It's not. It's not taking out stuff here so far, anyway. And let's get volume proper. This is going to start to get bigger, I think. I see absorption, says Edmund. Yeah, so far, I would say that's what we're looking at so far here. By the way, this is now 9 o'clock in the morning. So now, what do you think? We're a half an hour from the US Open. Should we continue to hold this, or should we think about just taking a little profit for the morning and waiting to see what happens at the Open? I'm going to take profits and look for a pullback for re-entry. Okay, that's good. So if you took profits in here, you'd be 4.5, 5 points. That's not bad for a morning. Looks strong on the hourly though, says Brian, so I'd hold. Okay. We're a minute from the US Open here. This will be the first 5-minute bar. So hang on, let me just go up another bar here or two. So it can be difficult to deal with the Open. Yeah, now the volume's come. This is more like it. Yeah, 100,000. That makes sense. So you can see that it's the right play would have been to exit here and get back in over here. But how do you get in on this? This makes it kind of hard. You'd have to jump in here, and you've already got a 2.5 point stop from top to bottom. And you don't know if it's going to take off or come up here, get uh, get its head knocked against yesterday's high and then come back down again. So that's not a really good trade to make. The so it's in the S&Ps, 4 or 5 points is generally a good little swing. 10 points is a very good swing. And beyond that is, getting out into abnormal areas. But yeah, you can think about it that way. 4 or 5 points, you can kind of see one way to do this is to just kind of keep an eyeball on the most recent, runs here. Like, so you got from here, from 23 to, it's only 2.5 points, right? And this one goes from 23.5 to 20, so 6.5 points. So that's twice what we saw before. So you might be thinking, okay, I'd at least like to take some off before the open, because the open is volatile often, and I can lose those profits. Or I want to take them all off, and then I'll get in again later. Either way, but the volatility, I find it often best to be positioned before the open if I can be. If there's a good, clear indication of what the market is most likely to do, being bullish or bearish, then I'll try to get positioned before and try to hold through it if I can. So I'm not always successful at that, but try to do that. So we're coming up to the 10 o'clock mark here. And we're going to pull back again. Where is the logical place to pull back to? Yesterday's high, yeah, 77. And you can see the shortening of the thrust is already starting here, and the close is off the low. And there's that one. Shortening of the thrust, closes off. I could go long now. Yeah, you can. You can go long right in here, right on that close. Yeah, Brian says buy. If you didn't get in, here's a good opportunity. Here's a good chance right here. You can get in at 77, say 78, right in here. Instead of buying as the market's coming down a little bit, you put it in, you get filled at 78, and you're already in profit. Pretty nice, right? So you can do things like that. If you see, oh, I missed this. Well, maybe you didn't. Yeah, you didn't get 77 and a quarter. You're in 77.5. You're in a half a point higher, but who cares? If the market's going up, you want to be in it and not be out of it for a half a point, And Dean said I could go long now. Here, this is the end of this bar, 10:30 bar. So this is 10 o'clock. 10 o'clock has come and gone. We know there's been no inflection here because the market's hasn't made it. So this is also a good spot to go long, right in here. And you can do that little trick of, I call it feathering in, or just, coming in a quarter to a half a point. Sometimes you can get 3/4 of a point if there's enough space there for it. But usually it's a quarter to a half a point. But frankly, you do that enough, you do that every day, day in and day out, even though it's only a quarter or a half a point, it does add up and does make a difference. Now, I wouldn't be focused on that if you're still kind of struggling to figure out how the market's working and all of that, and how to read it and stuff. Don't worry about that's a refinement for later on in your trading. Once you get consistent, now look for easy ways to increase your profits. And one of the easy ways is just to, instead of buying on the close, put an offer in a quarter to a half a point below that. and or above it if you're shorting, and see if you don't get filled. Now, problem is with that, with this approach, you got to be fairly good at it, because if you miss, then you miss the entire move, and then a quarter or a half a point versus 4 or 5 or 6 points, you're giving up a lot for that. So you gotta think a little bit about that. But typically you'll see some overlap in the bars, especially if you're in this kind of situation where you're congestion. Other thing I would notice, excuse me for yawning. I don't know why I'm so tired, but the other thing I would notice is that the buying is still stronger than the selling. I've not seen any selling come in yet, and the support is holding. There should be no reason whatsoever that the market fails right here and comes back down. Not to say that it couldn't, but there's just no logical or good reason for it. Not instruments, format indicators. Yeah, that's better. My Weiss wave gets stuck for some reason. I don't know if it's memory related or if it's just. So here we are. We've come up to the top. We can put a line in here. And you can see we're getting negativity in the price action. So likelihood is we're going to come back down again. So where is the logical spot that it's going to come down to? Probably not all the way down here, because we've already tested it. Maybe, but that's less likely. What we would be looking for it would still be bullish if it comes down to here and tests and holds, and it would give people a chance for more, to accumulate or acquire more contracts. But if the market's going to head higher, then a pullback shouldn't go very deep, right? Between 78 and 79. Yeah, somewhere in here probably. Yeah. You go long now, says Ted. No, you wouldn't go long here. Not if we're looking for 78, 79, 79. That's the end of that bar. Yes, it's a shakeout. Let's go long here, says Ted. And now, some people may see this as a spring. To me, it really isn't. There's no question that that there was some support here, and the market came down, tested it, and came back up. But it's just not a big enough spring for me. Had it come down to here, we've got all that space, and this is a clearly defined low here, right? And if we came down here and sprung this, that would be a fine trade to make, and I would call that a spring. But this is not clearly defined. Here's a clearly defined low. Then there's just one bar. Is this part of the move up, or are we actually pulling back? Maybe on a 1 minute chart or a half a tick chart, it would be a pullback, but I wouldn't see it quite that way here. Anyway, but it's still bullishness. It's still a shakeout. Drew out very little supply. Sorry, Ted, I missed that. You would go long in here, I think. And notice what Ted was doing. Excuse me, notice what Ted was doing. Shake out, rallies up, comes back down, doesn't even flip the Weiss wave. Probably did while we were there, but again, another little bit of a shakeout, then holds for a bar or two. That would be a good spot to buy right in there. We've twice tried to go down lower and failed, and now we're holding the little gains that we've made. So that would be okay to buy in there, as Ted did. Now it looks like it might be absorbing. Oh, on the test bar here, you'd go long in here. Okay. But this would also be good. Either way. So this is kind of interesting in here. Yeah, it's absorbing. We're in an absorption mode. The supply over here, we're right underneath of it and right along the top here. Oh yeah, that's nice absorption there. That's okay too. And there it goes. Lifting bottoms. Yeah, we don't have the individual bars here for bar volume to see, but the keys in absorption, which started roughly about here, is that we don't see down closes. We can have one down close, but it immediately will bob back up and close firm. But you don't even get, yeah, I guess you got that kind of here. But this is narrow range. We would not see volume pick up. If we were seeing individual bar volumes, it would be small. All these would tend to be small. And then what we see right at the end of absorption, the lows or the low of the bar starts to go, what we call the lows are lifting, the supports are lifting. In other words, the lows are getting higher. And typically we'll see volume start to pick up in the last 2 or 3 bars, but we don't have that here. And then it'll pop through. That's absorption. And it can be very lengthy like this. It's okay. This is the one time when, we often would say that if you get a really long trading range, the odds favor a reversal, and they do, because it gives people more of a chance to get short than continue long. And the exception to that would be this here, where we're kind of hugging the highs here. Instead of hugging the lows, we're hugging the highs, and we're starting to see buying come in, eager buying come in, and we know that by the lifting of the lows, and we'll see more volume on regular price bars than this. And that no down bar takes over this. We'll see. There was I was thinking maybe we'd start to get absorption in the S&Ps last week. We talked a little bit about it. We didn't get it, and I'll show you why we didn't get it when we get to the S&Ps. So kind of keep that in mind. I'll try to remember that. So where is this market going? That's the obvious point, right? Was that absorbing through the lunch hour? Let's see where the lunch hour is here. We're just coming into the lunch hour. So this was the 10 o'clock period we said before. And so this is an unusual day. It's not an easy day to trade. But yeah, we're looking for new highs above 81, and I would agree with that. There we go. Yeah, going for a multi-day high, new highs, hold the trade. Yeah. Um, sorry, I didn't realize this was doing this. Here's an aggressive play here. We've dipped underneath the low after a down bar close, and we close back firm. Market could continue to come down here, so you would add lightly. You add one contract or two in here, not a whole boatload. What's this? That's a weird, I don't know where that came from. Sorry. Not sure where that came from. Random. Yeah, I have no idea where that came from. Random line on the chart. So this is telling us we want to have a little bit of a pullback in here. I'd say hold the trade still. Yeah, Ted says we can go long and add to the trade right in here, and I would agree with him. We come back down to support, old resistance, should be support, pushing up. Look at, no, there's not going to be any volume to the downside here after all of this. It's all just upside volume. Buy again, says Brian. Where were you buying, Brian? Right in here, I think. Seven bars back. Sorry, 1, 2, 3, 4, 5, 6. Yeah, in here. Right. Buy again, says Ted. Yep, absolutely. Let me point something out here. Go back before this bar opened. This is a good spot to buy. You have a little weakness coming in here and here on these two bars, right? A little bit of selling comes in, a little bit of selling comes in. And we drive down on this bar. So we would anticipate the next bar coming down and going lower. But what happens? It doesn't. The flow to the downside stops right in here. And it's stopping where old resistance, we saw some resistance pushing down on this market here. That should be support when we come back down to it. And we're only doing it in, half an hour later or so, but that should be support in here. You can see that you can, even after 3 bars, or 4 bars, there's just no downside here. So let's see something here. That's the bottom. A bit of a grinder, yeah. Notice we've had no negative hourly bars the whole day long. Now, notice this situation here. Before we start the next bar, we're coming down, got some downside volume. Now we're at the bottom, we're at the low here. And we've stopped. So now, let's see what happens with the next bar. Yeah. So there's a buy right there. The flow to the downside stops, and we see good movement or good flow to the upside coming in. Okay. So yeah, everybody says buy again, but that's how we do that. That's oh, whoops. Oh my goodness, I didn't see the daily there. Look at that. It's really taken off to the upside. Little pop in volume, I would exit, says Dean. That's not a bad idea. We're getting up into this, we're up in the overbought area. And there we go. Right at the top of the trend channel, right? And here it's only 3:30 or so. We can short this going into the close. Why can we short this? A couple of reasons. One is we're at the top of this trend channel, so not a surprise to find the market. But we can go short here, even though the day's been long, because we've got a pretty good run to the bottom here. And you'll see people cover or exit trades and could cause the market to drop. So it's worth a little short. It's worth a short. I wouldn't put a big trade on, but it'd be worth taking just right into there, right? And there's your exit. Yep, exit there. So right at the end of the day, about 290 and change to around 2. So you get 4 points out of this, 3 or 4 points. And that would be it for the day. That's where the market stops, right there. So let's just do a quick recap. We started with a fairly challenging daily chart that really requires you to read into the price action and determine whether it's bullish or bearish. And when we looked at the coming in, the hourly had hit the high, yesterday's high, and started coming down. Didn't pick up any steam and seemed to consolidate in here. We rally up. This is roughly where the US Open occurs. Good bullish action in here. A lot of selling going on. There's a struggle, and you could see that we were in congestion, so people are all over the lot in terms of their positions. But we just ground through that and pushed on up. And we found plenty of opportunities to go long, both earlier before the Open, the US Open, and then maybe during the course of it, we tried going long. It was just a grind up. We saw absorption come in. We don't always get to see that on a 5-minute chart, so it's kind of cool when that occurs. And then opportunities all the way up looking for a higher high. We get up, there's no real sense of, when we look at the higher time frames, we don't really have anything to lean against in terms of a resistance area, a target area for us. And that's where we can put in a diagonal trend channel and they come to good use. And we look for the negativity coming in. And we saw a little pop in volume. That Dean saw that and said, time to exit, and got out at a perfect spot. And then we get the top reversal come in after that, and that pushes the market down. Any questions or comments on that? And we'll get to the current markets. Game plan for tomorrow, would we lean towards a rotational between, so for tomorrow, let's just see. Yeah, I would be looking for, you had a very strong day up and you've had 1, 2, 3, 4 days in a row up, right? Or you could even say 5 or 6 days in a row up. But 4 or 5 days are going up. So we would expect some kind of consolidation. I would be looking for a short opportunity up in here if highs are made early in the morning, in the first hour or so of trading. That may or may not occur. I don't know if it will. And the other thing I would be looking for, if we get down to this level at 81.5, which we probably would. So you've got 81.5 down here and 91 and change or something. So you got a 10-point range in here, and that may very well take up the morning session and the overnight sessions, and then in the afternoon maybe we could see towards the end of the noon hour we might see the lows start to lift, and we start to push up for a modest drive up. But that would be my thinking for the next day. We got bullishness in the background. I would expect we'd come down here and test, but we wouldn't spend a long time down here because of all this bullishness. And therefore, I'd be looking for a push up above the highs, but not in the morning. I would wait until the afternoon for that. You know, and if that's how I would see tomorrow. Follow through to the upside in the early session because it's broken out of long range. Yeah, that's possible too. But we've been up 4 or 5 days, and so I don't know what that would do, and I don't have the data on here now, so we can't see it. It'd be fun to see, but that would be my initial take, is to look to buy down here and initially to short. If it's coming up through at 2 o'clock in the afternoon, 2:30 in the afternoon, and it's driving up, I'm not going to short that. That's the consolidation stuff typically after a trend day to the upside, which is what we have on this day. The next day will likely be what we call rotation or consolidation day. Now, when we break out of a trading range like this, we can go 3, 4, 5 days without a consolidation day. But we've gone that already here. That's why I'm saying I probably wouldn't be expecting this to continue on up like a really solid breakout into new momentum highs. I'll bet you, in fact, that if you put a 310 on this, you'd be having new momentum highs at this point right here, because this would be a fairly flat 310, I would think. But anyway, the rotational AM session would be what I was thinking too. Yeah, just in the morning. Yeah, you get either rotation all day long or just in the morning, typically. And the best are rotation in the morning and then a good solid push in the afternoon. And you can get positioned for that. That's always a nice way to trade. All right, let's get to the current markets here. Taking a look at the S&Ps. So now let me adjust the volumes. I'm not sure about the S&Ps. They didn't really react to the impeachment stuff that went on yesterday and today. Well, they did react a little bit yesterday. Oh no, they went up yesterday. What am I thinking about? Anyway, I was looking at this initially for some absorption here, and you can see we have supply over here, we have resistance over here. So we start off, and now this is looking good. This is still pretty good. This is what killed the absorption right here, that bar right there. I'll highlight it. This bar here. Why? And it's this volume here. Why do I say that? Because it says supply is still dominant in the market, is still active in the market. Had this dipped down, could have dipped underneath this and then pushed up and closed again, that would have been great. And on bigger volume, that would have been terrific. But instead, what you get is a little bit of supply coming in, then no demand, then real supply comes in and brings us back down to this level here. And this is the key, I think, for the S&Ps. 2961 is the high up here. So somewhere in, I don't know if that's the actual number or not, but this spot in here, if we close under this, then I would say, if we close down here tomorrow, or we try to go up a little bit and then close poor, then we're headed back down into this area. That's a key thing, and that's why this is an important. I think this is an important level. And you can see we've traded around it quite a bit. So 29.60, 61, we come up here, back here, back here, back here, come through it, try to come up to it, come through it, test it, and now we're back at it. So is this going to hold strong, or are we going to come down? There's a complicating factor right here. Because of all of this, this should be very good support. So maybe we come down and test that first and then go. That's a possibility too. Anyway, there's a lot of different scenarios here. So last week we said 29.75 should be the low that holds in here. Went down a little bit lower than that, obviously, and then 30.30 to the upside. So for this coming week, what am I thinking here? Oh yeah, I didn't. So we'll say 29.30 to the downside for support. Okay, so here's how I'm thinking. If this is gonna if this is gonna go lower, then 3,000 is gonna hold. You can see I've got a little trend line on here, and there's also this high in here. So that area is got some resistance to it. So if we push back up into here, I would anticipate that holding. If it does hold, we come down to 29.30, which is the highs along here. And we have to see what it does down there. I'd be surprised if it just knifes right through it. But it's possible. If this breaks, then I think new highs, and we may not make it next week, but eventually within a couple of weeks, we get to 30.70 would be the new level up, or the new push up. And it would be it could be a pretty good push. I mean, just on a measured move, if you're thinking, from here to here. I mean, you can see that's going to be a pretty good run if it gets going. I don't anticipate that, but you don't know. You never know. I'm anticipating this 3,000 is going to hold, but we'll see. We will see. So watch tomorrow. Watch tomorrow's close. But I think the 29.60 level, that's key for us. If it drops below that, then we are likely going to see this try to push down into lower levels if it can get through this 29.30 area in here. All right, let's take a look at crude. Crude oil. I thought last time 57 would be the support. It dropped down a little bit lower than that, and 64 didn't quite make it all the way up there. So this week, I anticipate this line here trying to hold. So 55 to the downside would be where I would expect support to come in. And what am I thinking here? Hang on a second. Why am I saying 58? Yeah, I guess there's a chance that 58, yeah. Okay, so that would take us back up around to 60 if that holds in there. Now, if this breaks, then I would anticipate we're on our way back down to around 52 area. I don't anticipate the breakage, though. I guess what I was thinking that if that pocket in here holds, there's a small pocket in here, but it is pretty, it could hold. So 58, that's what I was thinking. I know why I was saying that. So if 58 for some, if we start holding at 58 and the market starts to get weak, then look for a drive down to 52. I guess that's the way to do it. Maybe I'll do it like this. And if 55 holds, or we push through 58, then we're on our way up to 60 and higher. That's the, yeah. No, Ted says 2930 for the S&Ps might be the battleground. Yeah, it could be, but we have to get through this first. And I actually think this is more significant. And that if we do break this, we're likely to break this. But we'll see. We'll see how it unfolds. But I agree with you. 2930 is also a key level there. All right, let's take a look at who's this? Oh, the 10-year notes. I think last time we were looking for it to hold around 129. It went a little bit lower. And we thought around 130.15. It went just slightly higher up to 131. So for next week, what am I looking at here? Resistance at 131. And I'm anticipating this comes down to 127.30, which is that key level along the monthly. This 127.30, 127.28 right in here. So looking at it on the yeah, this is fine. Just come back down into here and along this low in here. And we should hold down in there. I can't do that. I can't copy that. All right, that's it for me tonight. Yeah, that's it for me tonight. That was a good session tonight, everybody. Thank you for coming. Sorry, I went 5 minutes over again. Have a really good weekend, and I will see you next week, next Thursday, with a good trading, with something good for next week. Okay, see you next week, everybody. Take care. Bye-bye.